Good morning, all. And seems like we'll have to wait for the stimulus for further action for world markets and maybe Indian equity markets as well. Well, it seems to be that kind of a period. But anyways, let's try and figure out how we are set up for trade today. So the world markets had a flattish move. I think 3 or 4 hours ago or 5 hours ago, there was some urging from Pelosi and some of the others to Mitch McConnell to try and get through a bipartisan bill for stimulus as a building block for discussions, etc., etc. It's fairly complicated. The long and short of it is that the US markets were flat and the futures are flat as they await any kind of indication around the stimulus. Seems that the Santa Claus rally, which has happened for 32 years in the last, or 42 years in the last 60, and has not happened only in 18 years, will need the stimulus measures to come in. So let's wait and watch what happens. Meanwhile, by the way, not that it's any worry, but people keep a keen eye out on interest rates and yields, and the US yields have just inched up a little bit to that 1% mark. Some bit of inflation is probably good, but I just thought I'll bring it out to the notice that the benchmark US bond yield has crawled back to the 1% mark. So not that it means anything, but just keep this at the back of your mind. Anyways, the long and short of it is, as I said, that the world markets are flat. I think Asia would be doing no different. The early risers were flattish, I mean, in and around that flattish range, and no big gyrations from the Asian screen in the session today. So we're likely to have at least the cues that are coming in are relatively flattish, bobbing between the red and the green for most of the Asian bourses. This is HSI and KOSPI, and I really doubt that the SGX Nifty would be any different. And even if the SGX Nifty might be slightly different here and there, I don't know if we have the strength to kind of do anything materially different than what Asia is doing. So flattish start indicated, and I think that's what it would be. Now, within that though, that's the key point, right? Within that, the last few days, we've seen that even though the Nifty's moved up, of course, but on days when the Nifty's cooled off as well, we've had specific pockets do well and mid caps and small caps do really well. And I think that is the nature of the trade, viewers, at least to my mind. So if you see yesterday's move in particular, while we had fair degree of gyrations in the index and the index moved up and down, but it ended flat. But old economy stocks came back and did extremely well. We had select oil and gas names doing extremely well. Metals continued to rise and shine, so therefore they did really well. And I think that was the nature of the trade in session yesterday, that old economy stocks continue to shine on optimism around the economic numbers. BFSI has shown some profit booking, but also remember that BFSI had a massive rally in the run-up. So I think 35 or 39% upticks for BFSI, and some bit of profit booking is natural to happen. But I somehow believe it's unlikely to continue for long unless the flows picture gets disrupted. And I'll tell you in a minute what the FIs are doing. Just one. Let's just go back to the previous plate. I think the sector of the day today has to be telecom stocks. I've been told by a number of people on social media that I should try and speak about what could be the sector of the day. I wouldn't want to second guess really, and give some ideas about this. But I do think that telecom is in focus, because I think in yesterday's conversations that I had with a few dealers on the global side about what is it that they see in the last few days, they said that telecom stocks are seeing flows at select global dealer desks, and therefore watch out for Infratel. I mean, Infratel went up after going down in trade yesterday. Vodafone, Airtel, all of them firmly in focus. So do watch out for telco and telco related stocks. They could be in focus. Also, FI activity that I said, I thought we could probably talk about it selectively on a few days when it is notable. So yep, FI inflows yesterday were a measly 357 crores. Normally we would have cheered this also, but we've been used to these numbers of 2,000, 3,000, 4,000 crores. Even day before yesterday, the number was 3,200 crores. So yesterday, I thought for the first time in many days that the FI activity looked a bit subdued or cautious. Cash inflows only 357. They unwound significant long positions on the index futures and added about 2.7K shorts on the index futures. So it's a bit of cautionary activity, if you will, from the FI side in trade yesterday. Will it result in a steep correction? I don't know. But, we're no longer at 7,000, 8,000, 9,000, 10,000. At 13,200, it would be foolhardy to go ahead and trade long without preparing yourselves for some bit of corrective moves as well. So please be mindful of that. What about the stocks that one should all monitor? Well, the first one, naturally, everybody knows about this, HDFC Life. Now, first the news and then a bit of analysis. The news is this. Standard Life is going to sell 27.8 million shares in a block trade today. They are offered between 605 to 636, which is a discount of 0.03 to 4.98% discount. Now, anything could happen. It could happen at a block discount and then move up, or it could happen at a flat trade, then stay subdued. Anything could happen, right? Just watch out for the last line, which is that Standard Life has a lockup until March 29. So after this block deal, there is not a single block deal that will happen until March 29. So you have to bear that in mind. Now, two things. One, for which I will bring out what the brokerages are saying. So Jefferies came out with a note incidentally today morning, and they have said that they see an 80% CAGR in premiums to drive 17% CAGR in value of new business in FY22. They rate the stock as a buy with a price target of 800 on September 22 PEV of 5 times. Price to embedded value, that is. The other thing is, viewers, I just have some statistics out here for how does HDFC Life behave on days of block deals or immediately after that. So on 4th June, just hear me out, okay? I don't have data for that. I have not given it out, but I'll just speak about it. On 4th June, they did a block deal of 40 million shares. The closing price on 3rd June was 501. The stock ended on 4th June at 517. It ended higher, even though the block happened at a discount. On 27th March, 2.5% stake, sold at 477. The stock was back to 472 on 7th April. On 30th October, they sold 5% stake at a price of 575. The stock ended at 612 on the 1st of November. This stock has shown a tendency to bounce back. So my only limited submission would be, don't go short on it if it's already started off lower because of the block deal. History has shown that HDFC Life tends to bounce back. That's the limited point that I'm trying to make from a trading perspective. From an investment perspective, I already gave you Jeffrey's view, so I didn't need to give you mine. Wipro, that's the second stock in focus. They won a multi-year contract from Verifone. It's a contract to drive agility across Verifone's cloud service offerings. None of the IT stocks give the contract value, so I can't give you that. But do watch out for Wipro in the session today. Watch out for Bharti Infratel. Yesterday, some media houses had already reported this, but we didn't have any information. So we looked at the bulk deal data and then getting this to you, that it's Airtel's subsidiary that acquired the additional 4.94% stake in the company. And Netel's stake now stands at about 18.62%. So Sunil Bharti Mittal's company is checked into Bharti Infratel once again. Do watch out. It had a very strong close yesterday. Let's see if there's more in store. Tata Chemicals, where again a promoter entity interest was seen. Tata Sons, it gained about 5.5% yesterday, which was higher for the 10th straight day. Tata Sons acquired 0.7% stake in the company, which is why I think Tata Chemicals has been buzzing. And let's see if there is more in store. I would watch out for BEL. Jefferies has done a note. They said that after the analyst meet that the company did, they are maintaining the buy, but they're revising the target price higher to 145 from 130 rupees because they believe that the management has explicitly said that the low margin period is behind and 20% margins are sustainable. So that is one. And they believe that margin delivery, order flow, and execution ramp up will drive valuation upsides for BEL. And therefore, they are revising the target price higher to 145. Now, if the stock reacts, you know why. Ultratech is the other one in focus. There is a conference call today that they put out on the exchanges yesterday. That there is an analyst conference call today at 3:30 p.m. to discuss a business update, which means that there could be some update, some business update or an announcement that could come in from Ultratech's side. Do watch out for that stock. Also, watch out for Bharat Forge and Motherson Sumi, viewers, because I think the FR Intel Class 8 truck 8 orders have come in very, very strong. I think 31% month on month, 3x year on year. So that is looking very strong, and that could propel both Bharat Forge and Motherson Sumi, as well as RK Forgings, etc. So do watch out for these stocks. Could be very, very interesting. What stood out for me, viewers, just leaving you very quickly with a chart that I thought was amazing, and that is that all over Asia, you are seeing small caps outpacing larger peers for 2 straight weeks. I said it in the trade setup earlier on that it is very stock specific, and even if the large caps are correcting, Mid caps are showing flavor, and maybe that is where you should be focusing your energies on. Try and figure out where is it that the news flow is positive, and maybe even if the indices are flat or corrective, the mid cap activity could earn you money. So be mindful of that. Thanks so much for tuning in to the Trade Setup today.